In this episode, we shall discuss cost behavior. Cost behavior is the change that occurs in the cost when the activity level changes. When we talk about the change in the activity level, usually we refer to the change in the volume, maybe volume of production or volume of sales. And in practice, you will find some cost changes and some costs remain fixed. Based on that, the costs are being classified into the variable cost, that is cost that change in direct proportion to the activity level. Then we call semi-variable cost that change with the activity level but not in the direct proportion, and fixed cost which doesn't change and remain fixed irrespective of the activity level. Semi-variable cost needs a little bit of attention because semi-variable cost has two components, fixed and variable. As I said earlier, that variable costs are mostly the direct cost. For example, when we take up a job, material is issued, then we issue the material or consume the material for every job, and therefore it is variable with the volume of production. Or we talk about a batch of production of chemicals, then chemicals inputs which goes, that is variable with the volume of the batch, number of batches, and therefore we say that those are variable cost. So usually we shall say that all direct costs are variable cost. But when we come to the semi-variable cost, then there is a fixed and there is a variable component. Example is, the most common example I will say is a cost of power. The fixed element is the load. Based on the load, the cost is price is charged. That means the consumption, it doesn't matter whether you consume or not. Based on the load, there is a component that is included in the power bill. Then variable part is the amount that is charged based on the unit of consumption. There are many other costs which show the behavior of a semi-variable cost. But in most of the cost accounting model or management accounting model, we assume that the cost can be divided into variable and fixed, and therefore semi-variable costs need to be decomposed into variable component and the fixed component. As I have said that semi-variable implies that there is a fixed component which doesn't change and there is a variable component. My example of the power bill or the power consumption is also has a fixed component and a variable component. So we need to divide them, we have to decompose them, and management accountants have find out number of models to decompose the semi-variable cost into fixed and variable cost, although some of the methods may not precisely disaggregate or disaggregate the variable and fixed component, but in management accounting, as I have said, that we want to be roughly correct than precisely wrong. One of the method that is very common method, that method is the high and low method. Simple method. Here if we take a period, let us say 1 year period, then we calculate what is the highest volume and corresponding to what is the semi-variable cost at that volume. Then we look at during that period which was the lowest volume of activity, and we find out what is the corresponding semi-variable cost. Now we deduct the volume of activity from high to the lowest, what is the difference. We also find out what is the difference between the semi-variable cost at the high level and at the low level, and this difference is then divided by the difference in the volume. Thus we get the variable component of the cost. As we take an example, suppose we are talking about a year where the highest level achieved was 1700 units and corresponding cost was 17,300, and the lowest volume that was achieved during that particular period, let us say 600 units, and corresponding semi-variable cost was 6,300. We take the difference between the cost, we divide it by the difference in the volume, and we get here the variable component of the semi-variable cost as rupees 10 per unit. From here we can calculate the fixed component of the semi-variable cost. As the name implies, that fixed cost doesn't change even any activity level. Therefore, it should have been the same at the highest level of activity and at the lowest level of activity. And here we have calculated the difference between the 17,300, that is the semi-variable cost at the 1700 level of activity, multiplied by 10, that is the variable cost per unit. So, the difference gives us the fixed component at the level of the highest level. But as we say that the fixed cost doesn't change irrespective of the level of activity achieved, therefore, it is same for the lowest level as well as for the highest level. But when we apply this method, there are two very significant weaknesses. One is that when we take only 2 points, then definitely we sacrifice the accuracy. Second important weakness is that when we say high or low level, then either of these may occur in an abnormal period. However, we can address that by removing the abnormal period and take the balanced number of periods, that is balanced number of data, and calculate the high and low method. To improve upon it, the management accountants have developed what is called the average method. Here, let us assume a period of 1 year we are considering. We divide it into two halves, 6 months and 6 months, and for every half we calculate, applying the high and low method, the variable cost per unit. Then we get 2 data point of variable cost per unit. We calculate the average, and that average we consider as the variable cost component of the semi-variable cost. This is definitely an improvement over the high and low method, but we cannot say that that brings the highest level of accuracy. There are other methods also, which we can call the econometrics method, or we can say the statistical method. So, scatter graph and linear regression are the statistical method or econometrics method, but the accuracy improves only when we have large number of data. With 12 data points, perhaps the accuracy does not improve or change much from the simple method of high and low. But then there is a simultaneous equation method where we can get results, but the moment the data point increases beyond 2, it becomes little complex, and therefore high and low method is considered to be more or less, gives the more or less accurate figure, and that is the most commonly used method for segregating the semi-variable cost into variable and fixed component. To understand the fixed cost, because that is very important for our understanding, we need to understand how the companies mobilize the resources. In the first stage, they mobilize resources taking very long-term view, for example 20, 25 years, 30 years. Take an example, when we talk about an university, then the university acquire contiguous land, keeping in mind what would be the growth in next 30 years. Now, there is a huge tract of land which remain unused in various stages, because the university grows in stages. Same thing happens when we talk about a hotel or we talk about an hospital. All the facilities not created at the same time, the growth occurs in phases. If we think about a IT company, then in the IT company, suppose a company construct a building or take a building on lease, then it assumes that it should be available for long, for example, for next 5 to 10 years, or even if it constructs its own, maybe 15 years or 20 years. Now, when we think about it, suppose they assume that they will be able to go up to 5,000 seats, but the 5,000 seats are not created immediately. Those seats are created in phases actually. For example, 500 seats, then 500, so on and so forth. So again, you will appreciate that the resources that we have acquired in the first phase, they are not fully utilized, but their costs are incurred for their maintenance, and there must be a skeleton, I will say, organizational structure to manage them, and therefore those costs are fixed irrespective of the volume of activity. Whether you are utilizing the complete resources or you are not utilizing, you are actually spending money for their maintenance and also for their management. For example, a university has to appoint a vice chancellor irrespective of the number of students they are admitting in the first stage. Similarly, when we talk about a hospital also, a CEO is to be appointed, directors are to be appointed for different departments irrespective of what are the number of beds that are available in the hospital. Then in the second stage when we go, then we actually go for the acquisition in a short period of time. Here we may assume that the resources can be committed based on yearly planning or budget planning. Now again they are fixed costs, because whatever is the budget we have planned, we have acquired the resources, and may not be 1 year, actually for 2 years planning may be there. But once we have committed or we have acquired the resource, then irrespective of the production actually achieved based on the demand or some other circumstances, the cost of maintaining them is fixed. Cost of administering them is fixed. Mostly we can say that all administrative costs are fixed and all service costs are fixed in nature. They don't vary with the change in the activity level. Therefore, they are fixed. In the third stage, they acquire those resources which are adjustable within a short period, and therefore those resources take the I will say take the character of a variable cost or a semi-variable cost. So those resources we can call variable cost in the third stage, because they can be adjusted within a short period of time. So from this, one thing is very clear, that fixed costs are related to the infrastructure, to the administration, to support services, etc. But those which are direct costs, they vary with the activity level. Then we can talk about committed and discretionary cost. When we talk about committed and discretionary costs, we are segregating it based on certain costs which are fixed but at the discretion of the management. Example is the advertising cost. Now advertising cost is fixed, that doesn't change with the level of activity, your production or sales. Like salesman commission is a variable cost, but advertisement is a fixed cost. But even in the mid of the year, you may decide that you will cut on advertisement. So we say it is discretionary. Similarly, training expenses are discretionary costs. But when you cut back on those costs, that impact the long-term health of the company. And therefore, usually companies will not cut on those costs even when the volume of activity is low. But definitely, it is at the discretion to cut or not to cut the cost. So budgeted cost may be considered as fixed, but in the mid, this cost can be reduced by cutting the cost because of, for example, when the going is not well, the company may decide, okay, we shall defer training expenses this year, we shall go for next year. But the character remains fixed. Then committed costs are those which cannot be changed, which is not at the discretion of the management. If you have committed, you have to incur those costs. For example, you have given annual maintenance service, so it is a committed cost. You cannot help it. So this is a committed fixed cost and not at the discretion of the management. You have employed employees at a daily at the fixed wages, let us say a permanent employees. you cannot really lay off them in a very short period. It will have a very bad impact on the image of the company. You cannot get talent later, and therefore this is a committed fixed cost. So committed fixed cost cannot be changed at the discretion of the management, but discretionary fixed cost can be changed at the management discretion. Then we talk about relevant range and relevant period. Relevant range is the period, is the range within which fixed cost remains fixed. We were talking about the infrastructure. At the infrastructure, we can say that it can start from 0 to 1 lakh units. I am taking a simple example because you can by and by grow to the 1 lakh units. I am talking about units, but it can be anything different as well. For example, we can talk about a different number of students, we can talk about the hospital beds, etc., etc. But we can say that the infrastructure related fixed cost, that means what you acquire at the initial stage, first stage, they remain fixed for the whole capacity, plant capacity we may consider. So they remain fixed during that period. But at the same time, we can also consider that when we have in the second stage acquired 500 seats, or we created, let us say, 5 operation theatres, then for every operation theatre we can say 10 surgeries can be conducted in a day. Then irrespective of the number of surgeries that are conducted there, the fixed cost related to the operation theatre, the nursing staff who are permanent there, then the lighting and other costs maintaining the operation theatre are all fixed, but their range is for 10 surgery per day. But the charges we pay to the consultant doctor, consultant surgeon, or the other medical facilities that are being made, chemicals, they are variable in nature. And therefore, when we talk about relevant range, it depends on the facility or depends on the infrastructure we are talking about. For example, in a hotel, if you can say that infrastructure is about say 50 beds, in that case initial 50 beds the costs are committed and the relevant range is 0 guests to the, let us say, 50 or 100 guests. So this is the question of relevant range. This is very important, and from here being a concept is step cost, because the relevant range is crossed, then you have to incur further expenditure. For example, we can think about a very simple example that some school is taking children for excursion. Now they have hired bus for 50-seater bus for 50 students, but suddenly they find that 20 more students have shown interest to join the excursion. They have to hire another 50 buses, a 50-seater bus. Therefore, the cost has doubled because it is a step cost. A step has changed after 50 seats are arranged. Same thing can happen when we talk about the supervisor. Suppose the supervision capacity of a supervisor is 20 workmen. Now if it goes to 25, a second supervisor need to be appointed. This is the concept of step cost. Relevant period is important, because when we talk about relevant period, then this is the period within which the price doesn't change, because price changes and the cost changes, because we know that cost is expressed in monetary terms, and therefore quantity might remain the same, but if the price changes, the fixed cost changes. Suppose there are 4 supervisors who are working now, and suddenly their compensation has been increased after a year, then we find that the cost of supervision has increased, whether the number of supervisors has increased or not. Supervisors were the same, but the price has changed. Usually we consider 1 year period as the relevant period. Therefore, the concept of fixed cost in our management accounting models, we shall assume that fixed cost doesn't change in the short period, but in long run period they may change. Therefore, we often say that in the long run all costs are variable cost. Friends, today up to this, and we shall come to the next episode later. But what we have discussed today is absolutely important. The reason being, in all cost model, fixed and variable cost segregation is absolutely important, because we know that as a manager we cannot change the fixed cost and we cannot really impact them in the short period. But yes, in the long period, we can impact them. Friends, thank you very much for listening to this episode. Thank you.